Hello, good morning and welcome to the weekend edition of the newspaper show right here on ET Now. I'm Shell D'Souza and I'll take you to the top headlines and the stories as they're on the Economic Times as well as the Times of India. But let's get going with the top 10 headlines as they're on the Economic Times this morning for you. And first up is Prime Minister Narendra Modi saying the expansionists are either erased or forced to retreat. That's the top headlines as they're on the Economic Times for you this morning. Moving on, you have ICMR that set August 15th as the launch date for COVID-19 vaccines. R.K. Singh, who is the Power Minister, said that India won't import power gear from China as well as from Pakistan. HRD set to issue norms for online classes. Moving on to etailers, you have DPIIT calls for a meeting with etailers on July 8th. In a bid for vocal for local, you have enhanced value addition norms that are likely soon. Moving on to services, PMI in June has risen to 33.7 versus 12.6 in May. Sowing is up 87% since monsoon onset. You have Huawei as well as ZTE internal apps that have escaped the government ban. And lastly, auto companies hire wedding halls to house the staff. All right, and those are the top 10 headlines as they're on the Economic Times for you this morning. But let me shift focus to the top market headlines that we have this morning. And first up is Bharat ETF II eyes 14,000 crore rupees via two NFOs. You have T-bill yields that have dropped, government borrowing in a comfort zone. Indiabulls Housing Finance reported their Q4 earnings yesterday and post-tax loss is at 64 crore rupees. You have Motherson Group rejig plan fails to enthuse the investors. You saw that stock being hammered in yesterday's trading session. Earnings estimate for Nifty see record cut post the Q4 FY20 earnings. Talking about the corporate headlines that we have this morning in the Economic Times for you. First up is Bharti and UK government team bagged satellite firm OneWeb for $1 billion. You have Baiju's parent makes $300 million all-cash offer for White Hat Jr. You have Oyo that's offering stock option to all their employees. Tata Steel and Dutch unions have resolved their issues. And lastly, Pine Labs eyes Asia operations of the sinking wire card. And those are the top headlines that you have in the Economic Times for you this morning. But let me shift focus to a big story that we're going to talk about first up on the show, and that is this one right here. It is on page 4 of Economic Times. This is about Baiju's. Baiju's parents makes $300 million all-cash offer for White House Jr. Think and Learn, which owns and operates educational technology platform Baiju's, like I mentioned, has made an all-cash offer for White House Jr. But what is this exactly the story all about? My colleague Chandra is here to take us through the details of the story. Good morning, Chandra. Take it away.
That's right, a lot of action in the Edtech space. The Economic Times reports that Think and Learn, which is the parent company of Baiju's, has made an all-cash offer of $300 million to acquire White Hat Jr. White Hat Jr., founded a couple of years back, is a startup that offers coding courses for children. It's gained a lot of traction in the last couple of years, and this is a potential opportunity that Baiju's is eyeing. Now, this comes at a time when White Hat Jr. is in the market to scout for funding. They have approached a few investors, and it also comes days after Baiju's was in the news to acquire another startup called Govt. Now, remember, Edtech has really been gaining traction, particularly in the last few months, as more and more students and parents rely on online learning. Another startup in this space, Vedantu, is also in the market to raise funds. So this is going to be interesting. Baiju's clearly wants to consolidate its position in the K-12 segment, which is why you have reports of Baiju's acquiring Govt and now White Hat Jr.
All right, thank you, Chandra, for taking us through the details of that big development coming in on Baiju's front. But let's shift focus now and let's go to page 10 of Economic Times. And this is the story that I'm going to talk about. It is about Oyo. Oyo now offers stock options to all its employees. I'll read the news directly off the newspaper for you. More than 2 months after resorting to company-wide salary cuts and sending some employees on leave with limited benefits, Oyo Hotels and Homes is now offering all its employees the option to becoming co-owners of the company by granting them deeply discounted ESOPs. The SoftBank-backed hospitality chain is sending letters to all its employees, including those who are asked to go on leave, offering ESOPs. This is as per sources to Economic Times. You also have an Oyo spokesperson who's given a statement to Economic Times. Oyo confirmed the development. They said that we have offered all our employees the deeply discounted ESOPs comparable to RSUs. This is as per the company spokesperson. RSUs is restricted stock unit. So there you go. Oyo is now offering all their employees a stock option, a deeply discounted ESOPs, even for those who they asked to go on leave with limited benefits. Let's shift focus now from Oyo to Bharti Enterprises, and there's a latest development coming in. It's on page 5 of Economic Times. Bharti Enterprises and UK government has won a bid to take over OneWeb. So what is the amount that they bid for, and for how much are they going to take over OneWeb? I have my colleague Ajay Sharma joining in with all the details. Good morning, Ajay.
Well, distressed satellite constellation operator OneWeb, the transaction has been done, about $1 billion transaction we are talking about, and this is in partnership with UK government and India's Bharti Enterprises. Both the parties will be putting $500 million each. It is important for Bharti because Bharti is wanting to set up its own broadband internet, satellite network, whereas UK was requiring its own sat-nav operations, especially after Brexit. There was a gap which had happened there. So this OneWeb will be providing sat-nav operations as well. So both the the UK government as well, Bharti have benefit after acquiring this. Remember, this company OneWeb had gone into bankruptcy in March, and now the sale has actually happened. UK government will be owning about 20% in the company, whereas Bharti will not only own the rest but will also manage and supply all the business operations to run the company. So it's a win-win for both, and finally the transaction has actually happened.
All right, thank you, Ajay, for taking us through the story of Bharti Enterprise and UK government that is going to take over OneWeb. Let's shift focus now to page 4 of, page 7 of Economic Times, and this is a story that my colleague Parisha will join in to speak about. It's about vocal for local. Enhanced value addition norms are likely soon. It's a collaborative effort. Ministry of Commerce and Industry has asked fellow ministries to prepare product lists with potential for domestic value addition. So what is exactly the Commerce Ministry saying, and what does this exactly mean? My colleague Parisha is here to take us through the details of the story. Parisha?
Yes, the government is looking at measures to boost vocal for local and to reduce import dependence on countries, especially China and other countries. In a bid to do so, the Commerce Ministry has written to fellow ministries asking them for inputs for value addition into certain sectors. The ministry has asked to identify sectors which require a value addition in the range of 15 to 50%, and these are mostly sectors like auto, telecom, heavy machinery, railway. So these are the priority sectors. The idea behind this is to promote local products in a way that their quality is at par with global norms, and our industries don't have to import raw materials from other countries. Remember, this was one of the major challenges after India pushed for ban on Chinese products or pushed for reducing dependence on Chinese products, as industry members said that they needed raw material from China, and the products available in India are not of at par with the quality of Chinese product, and even if they are highly priced. So Indian government is now trying to push for value addition and to increase productivity, so that with scale prices will also come down.
All right, thank you, Parisha, for taking us through that story. But let's stay on with the page 7 of Economic Times. There are a couple of stories that I'll address. One is this Bharat ETF II rather. It's eyeing 14,000 crore rupees via two NFOs, the second series to be launched between July 17th and July 14th and July 17th. ETFs to have two maturities. One is April 2025 and April 2031. A base issue size is of 3,000 crore rupees, green shoe option of 11,000 crore rupees. The ETF to track Nifty Bharat bond target maturity indices. DPIIT secretary has said that the program will deepen and develop Indian bond market strategic divestments going forward. He's also said that the government to pursue strategic divestments aggressively, OFSs and buybacks to come too. So this is the latest headline coming in on Bharat ETF II. It's eyeing 14,000 crore rupees via two NFOs. The second series will be launched between July 14th and July 17th. Now let me shift to another story that's there on the page 7 itself, and this is about the services PMI, which came a tad bit higher compared to the previous month. So let me take you through the details of that. Services improve in June but still in contraction. The IHS market services PMI in June rose to 33.7 from 12.6 in the month of May, indicating a pickup coming in on that front. What are the highlights of that the services PMI? I'll just talk directly from the infographics. It gives you all the information that's there. So basically, the business activity falls sharply as the crisis have continued. Downturn may spill over to H2 unless infection rate is controlled. Business confidence at a survey low since December 2005. We have job losses on lower business needs, poor staff availability in some cases, and demand exports remain stressed. So though the services PMI has seen a pickup in the month of June, it is in the contraction. Remember, anything below 49 is considered as a contraction, but definitely improved from the month of May as there is the Unlock 1 and Unlock 2 is underway. Now let me shift focus to another story that's there on page 1 of Economic Times, and this is the Power Minister. Yesterday he spoke and he also mentioned the fact that they are not going to import power gears from China as well as Pakistan. To take us through the highlights from what else he had to say, I'm joined by my colleague Ashna Mishra. Ashna, top story that's there on the Economic Times, yesterday's Power Minister's statement on no imports of power gears from China and Pakistan. Take us through to what else he had to say.
Well, yes, that's right. On the heels of the issues that India and China are facing with respect to the border and what's happening in Leh, yesterday Power Minister announced that countries like China as well as Pakistan will be put in a prior reference list, which means that the countries which are there on that list, they will have to, if anyone wants to import any equipment related to the power sector from those countries, then they will have to seek a prior permission from the Power Ministry or from the government. But despite these countries being put on the prior reference list, Power Minister categorically announced that even though they are on that list, we will not allow anyone to import any sort of equipment from these countries, specifically China. In fact, he also talked about the import figures of 2018-19 and said that there were imports of about 71,000 crore in 18-19, out of which around 21,000 crore rupees worth of imports was from China itself. Also, he also said if we talk about the conventional power sector, then India itself has the capacity to manufacture everything domestically. So the issue was that when we already have the capacity to manufacture everything domestically and in line with the vision of Prime Minister Modi of Make in India as well as Atmanirbhar Bharat, why should a country like India depend on countries like China and Pakistan, especially given the fact that power is a very sensitive and a strategic sector, and it is susceptible to various viruses, malware or Trojan horses, because of which if they enter the system once, they can cripple the entire sector. So yes, this was what the overall discussion was about yesterday.
Ashna, let's stick to this entire point of the Power Ministry actually talking about that they are not going to import power gears from China and Pakistan. And also in the ministry order, they spoke about how we need to be careful about the viruses and cyber threat coming in from that front. So what is exactly that linkage with all this?
Well, yes, the Power Minister insisted on telling, actually yesterday he met with the energy ministers of all the states. There were power ministers from the states, from some states, the chief ministers were representing their respective states. So what he said was, and in fact it was not the first time yesterday that he said it, he has been saying it over the last month. He has raised this issue multiple times that power is a very sensitive sector. And there have been in the past issues of Trojan horses or of malware entering through the equipments to the Indian power sector. However, nothing serious has happened so far. But he said, given that the issues and given the relationship with China currently, they do not want to take any such risks of any malware entering the Indian power segment, because once that happens, then it will take only a few seconds for the entire system to get crippled. So that's why India wants to be on the warfront, and they want to, plan well in advance about it, and do not want to fall for that at all.
All right, Ashna, thank you for taking us through in details to what the Power Minister had to say yesterday. Remember, the Power Minister, after Road Ministry also has come out and said, the Power Ministry has said that they are not going to import power gears coming in from China as well as Pakistan. You heard Nitin Gadkari also in this week speak about how they are not going to let Chinese companies bid for road projects. Now let me shift focus from Economic Times right on to the Times of India, and I will get you the top 10 headlines that we have on the paper for you. First up, it is Prime Minister Modi's message that he's sending to China, saying the age of expansionism is over. Remember, the Prime Minister made a surprise Ladakh visit. He's hailed the Galwan Whaler as well. So that is the top headline coming in from the Prime Minister Narendra Modi, talking about age of expansionism is over. Let me shift focus now to ICMR's August 15 deadline to vaccine makers stirs a row. The council has said they only meant to speed up the process. Remember, ICMR has asked the vaccine to be launched by August 15. A lot of experts have actually raised their doubts on that particular front. Let me shift focus now to the education space, and GE and NEET to be held in September. New session from November onwards. That's another headline that we have for you from the Times of India this morning. Talking about the power and the huge surge in power bills that the Mumbaikars are facing, Mumbaikars have lodged 1 lakh power bill complaints. Remember, that's a point of, it is actually a cause of concern for most of the Mumbaikars, where the power bills have seen a huge surge. So there you go, Mumbaikars have lodged 1 lakh power bill complaints. And lastly, let me talk about the aviation space, and DGCA has said that no international flights till July 31st. So this is the latest coming in on that particular front, where the DGCA has come out with a clarification saying no international flights till July 31st. And those are the top 5 headlines that we have for you this morning from the Times of India. Let me now shift focus and let me talk about the IMD red alert that they've issued for Mumbai today. If you know that Mumbai is seeing some downpour since the last 2 days, it's just intensified. The waterlogging and traffic jams have plagued several areas in Mumbai, while 3 flights were diverted at City Airport on Friday as Mumbai received its first heavy rain of the season. The IMD has issued a red alert indicating extremely heavy rain at isolated places for parts of Mumbai, Thane, Palghar and Raigad for today. There you go, you have visuals on your screens coming in. Definitely the roads are empty, but Mumbai is seeing heavy downpour. There are certain areas also that have seen water logging as well. So that is the top headline, another headline coming in from Times of India for you this morning. And all right, with those visuals is out of time on this edition of the newspaper show. Thank you for watching. See you on Monday. See you tomorrow